This is Market Day Report. Okay, ready for a surprise? USDA with a bit of a surprise here. The World Ag Supply Demand Estimates report is out. Helping us break it down, Oliver Slope, Blue Line Futures in Chicago. Oliver, no way around this. The corn number, a bit of a surprise, right?
A bit of a surprise, and it looks like potentially a bin buster out there. And the old saying is that big crops get bigger, and boy, did the USDA kind of confirm that with their updated estimate today, coming in at 188.8 bushels per acre. That's up 7.8 bushels from the prior month, which is the largest monthly increase for this report that we know of going back at least 10 years. The last biggest update was 2016 when they increased it 7.1 bushels. Here we are. How much more higher can this yield get is the big question. I think the expectations are set pretty lofty, so it'll be interesting to see what next week's Pro Farmer Crop Tour comes out with actual boots on the ground. But this corn yield number, certainly a bit of a sticker shock to some.
Hey, Oliver, let's work through the others here. Old crop ending stocks. Any surprises?
If you're looking for a silver lining, that's where it's going to be. The old crop ending stocks for corn and soybeans were lowered slightly, so you're looking at a 1.305 for corn, which was below the expectations of 1.326. So a little bit of a silver lining there, and I think that's probably what is maybe helping aid a little bit of support. We're down pretty sharply in corn, but I think it could have been a lot uglier had that number not been so friendly. So the demand side of things still looks pretty constructive for the corn market, especially looking at the old crop carryout, and then for soybeans as well. That was below expectations at 330 million bushels. And then those world numbers were also below expectations, particularly for the soybean market. So a little bit more friendly of a report when you zoom out and look at the soybean market relative to corn.
Okay, and again, we're just crunching these numbers. The beans at 125.2 and the wheat numbers at 262.7. What will be the reaction from here on out?
That's the big question. I think it's interesting to note that the corn market is just kind of lingering near those contract lows that we said about a week and a half ago. I would have expected with a 188 yield, almost 189 yield, that we'd be a lot lower than where we are right now. So the fact that we're still hovering around those contract lows, I guess, is a little bit of a silver lining. And when you set the expectations this high, this early in the year, I think that leaves a little bit of room for disappointment. So potentially that's what traders are trying to digest right now. And then on top of this, coming into this report, the average analyst estimate for the corn yield was right around 184, but we saw a lot of other firms out there like StoneX come out with a 187 plus yield. So expectations were lofty. The expectations came in a little bit higher. To me, as somebody that looks at risk management and trading these markets, there's room for disappointment. I don't know how much you could potentially improve from that 188.8.
Oh, yeah, and Scott, you a bit surprised here. Scott Shelley's with us as well, the cow guy.
Yeah, well, when I heard the 188, I automatically assumed corn would be 15 lower. It looks like we were around that much. We were around that level. We bounced off those lows. It'll trade heavy. I guess we're going to see maybe some more reports of coming in when we'll start to hear about yield degradation or maybe too much water here, too much water. Then maybe that might buoy the market here in the short term. But I've been doing it for 39 years. Oliver's first sentence was big crops get bigger, and he's exactly right. This will weigh on the market. And I know a lot of folks out there were calling for corn to have put in the lows, and there was actually some buy recommendations before today came out. Maybe those things have been blown out of the water, but it's just going to be hard for corn to get up off the mat unless we get something from the demand side, which we could because we're so cheap. But at the same time, how cheap do we have to be to get that demand going?
Hey, final thought here, Oliver. We've got a big number again on the corn side. Is there really any chance it's going to get any bigger than this, or have we put our high water mark in?
The bar is set really high. As Scott and I mentioned, big crops do tend to get bigger, but this is going to be really quite difficult to improve on, I would think, especially this time of the year. It could happen, sure, but the expectations are high, and from a risk-reward standpoint, I think that leaves the door open for some disappointment. On the soybean side, August still such an important time of year, so the verdict is still out there.
All right, Oliver Slopes with Blue Line Futures. Scott Shelady's the cow guy. I'm Tony. We'll have more Market Day Report in just a moment.